Hi, I'm Kevin Walton and I'm with C2 Reverse, and I'm also an RSSA, which is a Registered Social Security Analyst. And as of March of 2023, there is now a second mortgage, reverse mortgage, that's available and requires no monthly mortgage payments. So I'm going to go over how this loan works and who it can work for right now. The second mortgage, reverse mortgage, is a loan that is for people who need cash for some purpose, who need liberal income qualifying guidelines and flexible payment terms, and they have to have considerable equity in their home. But they already have a low rate on their existing first mortgage, and they don't want to touch that mortgage just to get another chunk of money behind it or added to it with a higher rate. It doesn't make sense. You leave your first mortgage alone, and you get a second mortgage behind it. So who could use this loan? Well, homeowners, again, who have that low interest rate, and they don't want to touch that, but they need a chunk of money. Also, homeowners who've gone to the bank, maybe applying for a second mortgage or a HELOC, home equity line of credit, but couldn't income qualify for it. Maybe people want a chunk of money to go buy a car, solar panels, or home improvement, and they want to name their own payment terms. Also, people who just need cash and additional flexibility. This loan could work for them. So let's go over some general guidelines for the second mortgage, reverse mortgage. Minimum age of the youngest borrower must be 55 years of age, except in Texas, 62. Now, some people might say, well, wait a minute, I thought it was 62 is the minimum age for a reverse mortgage. That's for the HECM, H-E-C-M, home equity conversion mortgage that we see on TV all the time. This is a second mortgage as well, but it's not in the family of HECM loans. It's different. So the minimum age for the youngest spouse that goes on the loan is 55 years of age. It's a one-time lump sum. It's not a credit line option, so you get a full draw up front. The fixed rate for the borrower's lifetime is 8.99%. Again, that's as of March of 2023. There's no second mortgage payment required, as I mentioned. However, people make payments on reverse mortgages all the time, periodically for as much as they want, however often as they want. And the unpaid interest gets tacked on the balance of the loan. There is no prepayment penalty on the loan. It's a non-recourse loan, which means, let's say if you go to sell the home and for some reason the equity just falls out, the bottom falls out, and you end up owing more than what the property is worth. A reverse mortgage cannot come after you for the balance. It's a non-recourse loan. However, it is worth mentioning that a HELOC is a recourse loan. So if you are underwater on your home and it comes time to sell it and you do have a second mortgage or a HELOC behind your first mortgage, if you have a gap there where you owe more than what it's worth, the HELOC balance will need to be repaid. Reverse mortgages do not. Must be your primary residence, can't be on non-owner occupied properties. Property types allowed are single-family residence or a 1 to 4 unit, a condo, even if it's non-FHA approved. Now, some people don't know, but certain condominiums do not have FHA approvals in the association, which means FHA loans can't be done in there, and the HECM reverse mortgage is an FHA loan. This loan we're talking about is not a FHA loan. So they could do their own type of approval to get the loan done in that complex, where a HECM reverse mortgage cannot go. Unfortunately, no mobile homes are allowed at this time. Currently, as of March 2023, the states, there's only about half a dozen that offer the second mortgage, reverse mortgage. California, Colorado, Florida, Texas, Connecticut, and South Carolina. Hopefully more states will be added soon. Minimum loan amounts, $50,000, and it's a full draw. Qualifying formula, age of the youngest borrower, the appraised value, and also prevailing interest rates is what's going to drive the loan amount for this loan. There is no debt to income ratio on any reverse mortgage like there is on conforming loans. We use those three factors and out comes a loan amount. You still have to pay for your existing first mortgage payment, property taxes, and insurance to income qualify for the second mortgage, reverse mortgage. The proposed second mortgage payment isn't used when qualifying for the loan. So again, that's where not having the mortgage payment comes into play. You don't need as much income to show to qualify for it. And please keep in mind, the reverse mortgage is not the loan that it once was. So there have been added guidelines and safety features to this loan to make it more user-friendly. So if you've heard some things about the loan in the past, not good things, you might want to give it a hard second look, because a lot of people don't know about some of those new guidelines that have been added to make it better and safer. So if you live in California and you want more information about the second mortgage, reverse mortgage, you can leave a comment down below, or you can go to my website and fill out one of my contact forms, or send me an email, and I'll get back to you, and I could make a unique video for you and your family that shows how this loan works, complete with amortization tables, so that way you can share with others. So thanks again for your time, listening and watching, and take care. Bye.